Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Happy Webinar Wednesday. Looking forward to seeing you all tonight at 8 p.m. Eastern, but we'll talk about that a little bit later on. We've got a lot that we are dealing with in this market. Front and center is just this exodus that we've been seeing in the staples. And, there's a lot of reason why this is happening. We know that a number of major companies weighted heavily within the staples are leaving Russia. They're not doing business there for the meanwhile. McDonald's, Coke, and we saw this sector, which is typically a defensive corner of the market, get rocked. Right. So I'll be looking for this corner of the market to sort of right the ship. It's unusual to see that kind of reaction. But nonetheless, take a look at what's going on in the broader averages. We're getting a little bit of a bounce today. Well, I shouldn't say a little bit. I mean, these large candles are sort of becoming normal. So I say a little bit because it's actually a candle that's smaller than the previous session. That giant candle is an inside candle right now. So as much as it is moving higher, as I like to remind our traders, it's really not going anywhere new. We're not making a lower low. We're not making a higher high. We're just going back and forth over a well-worn path that we established yesterday on Tuesday. So really interesting action, kind of par for the course. Remember that downtrends, and think about this for a moment, because I know a lot of us are well-versed, quite comfortable visually with uptrends. Uptrends are actually pretty vanilla until they go parabolic. Downtrends are just crazier than a bag of squirrels usually. They're very volatile. They tend to have extreme moves to the downside. Then they have short squeezes, and there's bottom pickers, and there's another move to the. So this is really the nature of downtrends. They're just far more volatile. So with that being said, of course, as always, this show is all about your questions. So let's go ahead and dive into them. I see some questions got in there really early. Hey there, Tyler. Good morning. Happy Wednesday. What do I think of XLRE for a short? Was double red a bit ago. It sure was. And it's trying to stay below that 200. It sure is. We've got some propulsion action at the 55. We've got a nice volume ledge up here around 47.15. So generally speaking, I don't want to be long XLRE. So you're right. I mean, sometimes the process of elimination to just filter down to what we do want to do is oftentimes, well, it reminds me of my pre-SATs. What is the Latin root of decide? I believe I didn't get that good a score on my SATs, but good enough. I believe it's desire, and that just means to cut off from, right? So cut off from the things you don't want to do. Ultimately, you're left with what you do have choices to do. And I agree with you. It's a short, Tyler, when you go through that process of elimination. Now, what I would also say is dive into the heavily weighted stocks. You know what? Let's do this for a moment, because this is really at the heart of what I do in the Sector Secrets Mastery. It's no surprise. The webinar tonight, we're going to talk about how do you use these pre-curated list of stocks to do the heavy lifting in terms of what you want to trade and what the outperformer within the group is. It's not complicated. It does not require hours and hours of complicated analysis. What's in the XLRE? So Tyler, what I would say is dive into these names, and maybe some of these are already leading the charge to the downside. Some of these might be south of that 200 propulsion with a more steady double red. So I would absolutely check that list. I'm sure you already have, but yeah, I like this thing heading south. I'm with you there. Good stuff. All right, next up, can we take a look at DQ energy? So 200 propulsion, it's trying to move higher. I think what's interesting, I don't know anything about DQ1K. I mean, a little bit of a Google search, a little bit of a search on ETFD. I can get very familiar with, what the universe of DQ is all about, but it's below the 200. And the trend that preceded that move higher was down. So I'd be very hesitant about being bullish at this point. And if I were, I'd wait for a retest of some of this volume, this nice thick volume area down here to build along. I'm not sure what direction you're looking at there, my friend, but yeah, I think you've got an interesting juxtaposition of, at a resistance level right now at 200 within the context of chop. But then you've got the support level if you wanted to try, and maybe, I don't recommend it usually, but try and front run a reversal, because at least we're neutral. And there is a chance we see a 1, 2, 3 reversal pattern. All right, next up. Hey there, Tom. XLP. Yeah, so I'll tell you what, Tom, I'm long. I'm long XLP. I'm long Mo. These are two trades that we sent out in the Sector Secrets Mastery yesterday, looking to take advantage of, look, it never feels great. It's not catching a falling knife, though. I think this idea that anytime we are looking to buy in the midst of weakness is somehow guessing where the low is. You don't hear anyone saying they're trying to catch a helium balloon when they're playing momentum to the upside through resistance. It's the same thing. We're playing probabilities, and probabilities are largely dictated by the underlying structure of the market. Mo is still a solid uptrend. That's a buy the dip. XLP is really a play on it staying above the equator in two previous times, right here on December 1, and again on February 14, where price came down pretty dramatically, tested that 200, and then we're looking for support. We're looking for the buyers to wake back up and do their thing. So that is what I'm looking at. We're long both. And, I think we pierced that level, Tom, to your point about quote unquote breaking it. I think we pierced it. What's the difference? Break, pierce, tomato, tomato. What's the difference? Well, for me, a break is not only the price action getting through the level, but that actually we establish, in the case of XLP, where we think it might break through support, that we actually establish resistance, right? And it looks like it's now a ceiling. Piercing, and by the way, we did it before on the 24th, not as big a deal, not as big a deal. All right, next up, hey there, PH19 Golf. My favorite number and one of my favorite sports. I have been trading with your chart layout for a couple years now. They are amazing. I appreciate that, my friend. We have, look, if you have seen me use an indicator 5 years ago, 10 years ago, the things on my chart now are either one, the evolution of those indicators. So just a better visualization of things that I was doing a decade, sometimes 2 decades ago. And really the same things that I've been using for a long time. So you're going to notice with my layout, there's an evolution to it, but it's always rooted in the same philosophy, the same indicators practically. And we always will stick with these because, just as the URL for tonight's webinar says, this is timeless. And that's a big deal to me. There has to be consistency in our tools. There has to be consistency in the approach. It's not as if an uptrend and a downtrend suddenly mean I've got a different layout on my screen. Hardly. It's not as if the issue in Ukraine is now a different strategy. That's not how the game is played. We know that certain events, downtrends, are more volatile. We know that geopolitics adds more volatility. But by and large, the geopolitical situation has really only accelerated the trends that were already in place, or it allowed markets that were already in the bullish hemisphere to keep moving higher. Now, with this bullish bearish hemisphere thing is sort of new lingo. In yesterday's free video, especially for those of you that are getting a feel for, gosh, how do you find your bearings in this market? This, if I do say so myself, is 10 minutes well spent. I got to say, this is probably one of the most important videos I've cut probably since we've seen the volatility. So if you haven't checked this one out, 3 steps to getting your bearings in this market, it's absolutely going to be a needle mover, because I know that the consistency of running through these 3 steps was, for me, how we initially identified the chop early Q4, late Q3 last year. Doesn't make it any easier to trade, but we can start to adapt. And then how we righted the ship between a very difficult first week of January to how we completely turned things around in about 2 weeks to the just absolute tear that we're on right now. It starts with those 3 steps. And then once you check that video out and download those indicators that are available over at countdowntrader.com, come check out what we're doing with those indicators over at the webinar tonight. So I appreciate that, my friend. Yeah, I do. The consistency is so important, because if we're always jumping the process, well, then we have no process. If we're always jumping around, and if we're always adding or removing new indicators, when do we get some time to visually learn what that indicator is communicating and learn to trust it? I mean, bonds do take a little bit of time. So, we have to, in some way, we need to bond with our indicators, because the confidence comes from, and many times, sometimes just time and circumstances, right? When indicators get you through tough times, that trust grows even more. That's why I trust my indicators so much. That's why they are as stable as they are. Kind of like good friends, right? Okay, so Comcast. We are still short Comcast. What's our target? I'm looking at either this Darvis level down here. These are the things that'll guide my decisions. Automated support and resistance does not get any better than this, and it's free. This is one of the indicators available over at Countdown Trader. And then we have this nice volume ledge right there. So what we have is really a combination of a few tools that I believe are a few levels based on Darvis, Darvas, for those of you wondering how to spell it. Darvis, from Nicholas Darvis himself. And there's a nice volume ledge. What does volume tell us? Commitment. That's where people have dug their heels in. That's where levels are going to be defended. That's where there's size. If you want to decode the shenanigans in the market, shenanigans typically come with size. Keep an eye on volume. It is the ultimate decoder ring, right? Who didn't want one of those when they were kids? But we have one now. It's volume. So I like those levels, Mike, and this is an open short that we have in the master. I think we sent out Comcast and Intel on the same day. So let me touch on Intel here for a moment. Intel is actually in our zone. We've built the short. We have plenty of time. But Intel has a narrative since, I believe, the State of the Union. The Intel was sort of in play politically. That sort of is this out of left field impact on this setup. Does it invalidate the setup? Nope. That's what we have: agro, moderate, and conservative. So we're still in that zone building this position. So when we see this up, it's moving with the NAS. That's fine. I still think that I still see, forget what I think, forget what the gut says, but we still see largely more red grab than neutral blue. We still have a little bit of a neutral market. But remember, we don't wait for max debit ever. That is not what we do. What is the math that we practice in Sector Secrets, in anything that I do? What is a paper cut level at which probabilities say, after a certain loss of premium, we know this trade is far less likely to work for us? Hint, it's never max debit. It's never zero. Somewhere between 50 to 75% earlier, that trade lost the probability to follow through. And yet, sadly, I see a lot of traders buy calls, buy puts, and just risk all of it. That makes zero sense. All right. So we keep to paper cuts because all of us have a too big to fail level individually, right? All of us have that amount of loss for a trade that triggers in our mind that awful thought of, I can't get out now, I'm losing too much. We need to avoid that, and paper cuts are the way. So I want to talk about one that's given us a little bit of trouble, but not so much that it's in paper cut territory yet. So yeah, we've got a really nice Comcast short. Both of these were sent the same day. Comcast is following through pretty nicely, and I do think Intel will follow suit. All right, next up, CTVA. Uh, Potential buy the dip. Yep. It's a volatile one. Corteva. It's a volatile one. I'd say that if you're looking to buy the dip, it's a little tricky, but it's valid because we do have the previous up double green uptrend. It's gone neutral now, but remember, even when a market goes neutral, what are we going to do? What was the trend that preceded the chop? This is 2 days of chop after what, almost 2 weeks plus of an uptrend. So I think it's buy the dippable, but just fasten your seatbelt. It's a very volatile couple of candles. Clearly, there's some serious volatility going on here in Corteva, but it is buy the dippable. Andrew, yeah. All right, BMY. We love BMY within the XLV. Hey, Debbie. Yep, it's finally coming back down. BMY and actually ABBV, AbbVie and BMY are the two best high concentration weighted stocks within the XLV. So yes, if we can get some pullbacks to the wave, I can tell you right now, we'll probably today, when I see you all for the weekly live trading in the Sector Secrets Mastery Room here in about 3 minutes, we'll probably start taking a look at that volume ledge and the wave right around 67 to start in, and maybe even this gap close area. That's an interesting area right there as well. We're probably going to look at that area right there to start building our agro position long BMY. We need a little bit more weakness, but it's finally coming back. AbbVie 21. AbbVie is going to be a conversation around the 21. So I like the way this looks. We're in a very interesting area. I got some volume ledges in play as well for super aggro entries, but finally we're getting some good pullback. 67, you got it, Debbie. Good eye, you got it. Excellent. What are my thoughts on, hey there, Lauren, what are my thoughts on XLE? It would have to pull back a long way. Yes, it sure would. It sure would. You can see there in the circle. I think this is one of the examples that I'm going to go through in that webinar tonight, simplertrading.com/timeless. Gosh, I love that URL. That pullback into the wave is really what allowed us to get long, and then we're enjoying the ride for now. We're seeing a pretty good pullback, 75. We could possibly look at this volume ledge right here. Super aggro, but 73 could be interesting. That's what I'm thinking at the moment. If we're going to get aggressive in terms of a level, that might be one right there. If not, I do have to wait for it to come back into the wave, and it might take a really long time. But this is where exhaustion traders, trend followers know when we are in that zone, trading is much more like being a baseball batter. We don't get to look as a baseball batter. We don't get to look at that pitch in our zone, watch it whiz by, land in the catcher's mitt, and tell the pitcher, hey, could you throw that one again? Because I really like it. We know that trading doesn't work that way. So what happens is when we have to learn to recognize that pitch as it's coming at us, we have to know very clearly what our zone, what our preferred zone is. This is right out of the circle of competence from Becoming Warren Buffett, which in many ways for me is a documentary that everybody should watch. Trader, investor, whether you like the guy or not, I think you'll come away liking the guy. In a world of hedgies living these extravagant, lives of, well, whatever, this guy lives in a very humble way. That resonates with me. He just wants to be really good at what he does. Again, I'm not saying he's perfect, but if you look at his strategy for trading, investing, life, you get really good at something by staying in your circle of competence. You know your pitch, right? So he and Charlie, they've been very open about what they do and don't understand about the market. We too, as traders, have to be equally aware of what we do and don't understand. So the circle of competence in terms of knowledge, well, luckily that can grow. We can study, we can read, we can educate ourselves, we can attend webinars, right, to increase that circle of competence. But then we still need to know that specific zone, right? And for me, that would be it. That would be it. So we've got to wait for that. And when it does get there, we can't hesitate. Now we're that batter at the plate, and that pitch is coming at us, what, 80 miles an hour minimal, right? So I hope that makes sense. Last question before I head off into the room. Last night's video I mentioned, I talked about gold in last night's video. Well, yeah, generally speaking, we've been talking about gold for a few months, and the idea is gold is going to move higher with its inverse relationship to real yields. Real yields is a nominal yield of a bond minus the rate of inflation. So bond yields are going up, but so is the inflation rate. And gold moves opposite to that. So if real yields are moving higher, gold moves lower. If real yields are moving lower, gold moves higher. Gold has another reason for moving right now. It's geopolitical. And so that means these are going to be take a look at this candle. This is why we don't chase higher highs. Somebody did. Somebody got long up in this area, and they're going to wake up to lesson number 412 as a trader. Don't chase a market. We're not Jack Russell Terriers tearing after the big yellow school bus, right? So this Darvis area here around 77 starts looking very interesting and actionable. But overall, that's about where I'd start the pullback conversation. I'd like to see yesterday's candle kind of get erased, meaning we get an equal size candle, just sort of nullifying it. And then we can come back to levels where, yes, I want to be long gold. Yeah, for sure. All right, gang, that's it for me. I'll see you all tonight at 8 p.m. simplertrading.com/timeless. Also, in the meanwhile, check out last night's free video, 3 steps to getting your bearings. It's going to be a great way to prepare for tonight's webinar. All right, be good to each other. I'll see you tomorrow.